Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for the week ending Friday, September 6, 2019. We're going to start out here. We'll do a quick overview. I did this in the video for members this morning. Took a look at the long-term charts, but we're not going to go through them all. In that video, I looked at all the indexes as well as the all 11 sectors within the S&P 500, showing you the technical posture and then which levels. There's some key levels, support levels, trend lines, moving averages, etc., that were either right on, just below, or just above. And point was, when the majority of those 11 sectors give way, break those supports, give those long-term sell signals on the weekly charts, then you'll have a good idea that you'll have a pretty good high probability trend sell signal, sell signal that will last for weeks, if not months or longer. But we don't right now. Let's start out here with QQQ. This is a weekly chart. Here, we'll zoom in a little bit. There's two uptrend lines on the QQQ weekly. We had a bull market trend line off the lows back here in 2008. The tech sector in QQQ, which is mostly tech stocks, bottomed in '08. Everything else bottomed in '09. So you had that, and then you had a better than a 20% drop in the Qs. But as I mentioned in that other video, there was a mini crash in a lot of individual ETFs such as XLK and QQQ. So the index itself didn't fall, but QQQ fell over 20%. And a lot of sectors actually fell 20% in many indexes. And so some consider that its own little bear market within a larger bull market. But either way, call it a big correction, if you will. That was back in 2015. And then you set up with the, here, let me zoom in a little tighter here. Then you set up with a trend line in many of the indexes off the early 2016 lows, and QQQ again, because you have that the mini crash in the Qs right there, and quite a few other stocks back that day. But it comes in perfectly with this low here in 2016. So to me, this is the primary trend line in Qs, and it was broken last fall, during the meltdown in the fourth quarter of 2018. And we went up, we back tested it, and we're inching our way higher. We had divergence in place then that foreshadowed that, as well as the sell signals that we had at the time. So again, this was not certainly didn't catch us off guard. We shorted that through a bulk of the way down there. And then started going long and bullish on the right after the 24th on those lows there. But what that did is to set up just larger divergences. Again, I've covered this many times. So the divergences that were in place at this point that did lead to that correction, they were the technical catalyst for it, just like they were back here as well. They only grew larger this time around, and so we have larger divergence. But most importantly, or probably if I had to pick just one level right now, it would be this trend line right here off the lows on December 24th. So you have the indexes wedging up above that support level. This is QQQ. Again, we're looking at a weekly chart. So as I said earlier in today's video for members, all that matters is a weekly close, not what happens intra-week. You need to see a solid red candle on a weekly closing basis, and just below that, keep in mind we have the one of my favorite moving averages, the 200-day exponential moving average, which is the same here on a weekly chart as the 40-period weekly moving average. It does a phenomenal job of defining bull and bear trends when the market is above or below it. Now, when you have a corrective phase here, which we did, choppy, you're going to slice through it. Moving averages as trend indicators only work well when you're trending, not in a sideways market. So during an uptrend, that's what you want to do, is buy pullbacks to it. And then just like back then, you had a break of both the trend line, the primary uptrend line, and the 200-day. That triggered the big drop there. Came in, back tested the trend line, fell below it again, and again. Once we broke out from that range and we started trending up, all the pullbacks were support, and then boom, we broke the trend line in the 40-week right there, had the big drop. We even came and back tested it there, failed, dropped, regained it here, and we've been above it since. And because it's a weekly chart, all that matters are your weekly candlestick closes. So there's one where we pierced it intra-week, but then we closed back above it right there. That one closed on it, that one above it. 1, 2, 3, 4 dancing on it so far, and so that's it. So we have really a confluence of, like I said, if I had to pick just one, you want to give it the benefit of doubt, that's 40-week. But of course, this trend line should do the trick, and that's how it looks on QQQ. And again, the divergences are even larger now. So I'm going to get down to the daily chart, show you where what I think might happen here in the next few weeks. But SPY, now SPY already broke down. SPY had the same trend line, or actually a different one. SPY had a very clean trend line off the 2009 lows. March of 2009 is when SPY and the S&P 500 and just about every other index bottomed. And so there was your bull market right there. It broke here. And all we've done so far is simply back tested that trend line from below. So SPY is already, well, like QQQ broke down, but SPY has already also broken below the trend line off the lows on December 24th. And that's it right here. We got to come in. I need to see. I'm not touching that candle. I need to come in right to the bottom of that candle. And then you have these two candles here. That candle, breakdown, back test. A couple weeks of back testing. So that's where we're at. Divergences are still very much intact. Again, it's not as if they don't play out or didn't play out then. We had divergence. We had the biggest correction throughout the entire bull market up to that point back in the fourth quarter, and those divergences are even larger now. So that's it. So oh, and there's SPY. You can see the old tried and true 40-week moving average came in and worked like a champ. In fact, it's done so since we've been above it here. Saved it, saved it, saved it, saved it, saved it. So that's the level we need to go. Again, once you get below it, once you break, we've already broken trend. We're back testing. So now we need to break that 40-week right here on SPY. And once you're below it, you can look to, short back bounces back to it. And remember, it's the fat part, the bodies that show you that you close below it every time you tried to pierce it intra-week, couldn't hold above it, and that's that. And of course, support back here. So those are that's the long-term, bigger picture stuff. That's not going to change this week. This week is over, so we just simply have another back test there. Let's look at what could happen here. On the daily chart, we have, the trend indicator, the PPO signal line, the 9 EMA, is still below the zero line. That's one trend indicator. It's not a perfect one, but it does a pretty good job of capturing the big trends. When you cross below the white line, it tells you you're in a downtrend at that point. And when you cross back above and the line is above the zero line, this dotted line here, the trend is bullish. Not going to use trend indicators during a whippy sideways market. They don't work well. Ignore them. You'll get whipped to pieces. Find a trend and then look for the crossovers. This one happened to be a whipsaw signal, and again, this one may. But so when I look at this, I see there's the trend line off the lows on December 24th. I just showed you on the weekly chart. Here, I'd have to come in and maybe, yeah, there it is. Tighten it. So we're right about on it. And let's make that line a little brighter now. It should stand out. It's pretty important. So there it is. Breakdown, back test. We were back testing here, back test again. And you can see there's room. The thing about back testing is sometimes you back test for a while. So, there's plenty of room to continue to back test. And if we do, and I'll show you this in QQQ, the divergences that were in place at this recent high that led to this drop, which was one of the biggest drops of the year right here, about a 6% drop. Those divergences could very easily, in fact, they would be extended if the market were to rally. Now, if the market doesn't, kind of grinds around for a while, but if in the next couple weeks here, and I'll tell you, it's probably at this point put pretty decent odds that can happen. If we can rally up there and make a marginal new high, just like every other high has been so far. Every time we pop just barely above the highs, we get shot down. We broke out here, we got shot down. So either way, we've already had the divergence we could turn down. But again, I maintain what I've been saying. I think the upside is very limited. So if we went up for a few more, let's say another week or two, what is that, 2.5% right there, about from where we are now. If we got there, that's 17 days, 11 trading sessions. That would be about 2.75%. So call it about 3% to have a back test of that trend line. So again, to me, just the risk reward is just not very attractive based on the technicals, everything from the weekly, even the monthly charts out there. And of course, if we turn down sooner, fine. We already put in the divergent high. QQQ. Similar story, Q's closed down slightly today. SPY was up slightly. Small caps were down, and I want to get to those. I had a member that asked me to try to include the small caps more often. I'll cover IWM next. But there it is. So same story. Stuff I've talked about time and time again. Divergent high, correction, divergent high, correction, divergent high, correction, and whether or not we make one more. Again, it's already priced into the charts. This is at this point in time immutable. It will not. These divergences cannot and will not go away anytime soon. They can go away if depending on what happens. If we trade around sloppy for a while, go down, maybe here, do something like that. But should we pop and do that, let's say 2-3% rally in the next week or so here. There it is. That'd be about 3% or so over the next, a little over 2 weeks there. Let's just say in QQQ. And I'm just looking at the posture of the indicators down here. They would not burn through the divergences. They would most likely come up here, somewhere in there, and simply just extend this divergent high that's in place. And then most importantly, you need to see, as I just showed you on the weekly chart, QQQ is still above trend. It's holding above that trend line, and that needs to give way. So that would be a sell signal if we get that, as would if we fall back down into the trading ranges. We'll see. This is all to be continued next week. Flat day. One thing I will say is, the bulls couldn't build on today's gain. I shared this chart in the video earlier today. This is a 1 minute chart of QQQ. So what we're looking at here, let me park this PPO. We don't need that right now. Just looking at purely at price. Here was our gap up yesterday, right? Gapped up strong, had a strong, this was the stop pop I was talking about. And that's where shorts were just blown out, bulls bought in. But the first thing I noticed yesterday, and so here's the day break right here. So this is yesterday, this is today. And obviously you can see it's a pretty darn tight trading range right there. Let me just box in the range so it's clear it all here. So the first thing I noticed yesterday, about earlier in the day, in the afternoon, that it didn't prove to be a trend day. A lot of breakouts, if they're the real deal, you have a trend day. What's a trend day? A trend day is where the market opens up higher and it moves higher steadily throughout the day, or at least that's a trend day on an up day, and closes at or near the highs. And so that certainly didn't happen. We peaked out shortly after the open again, as in my opinion, the majority of stops all the way here were blown out, and then we kind of drifted down. Now the market's held the breakout, so you can't chalk that up right now as to anything but bullish at this point, unless a breakout fails. Look, it's just a consolidation day. And so like I just said a minute ago, I could easily see another pop up, couple percentage points, let the market cheer new highs again, and then the same thing that's happened for the last almost 2 years now, that every time the market breaks out, it's a marginal breakout. We're talking just anywhere from less than 1% to maybe 2-3%, and then boom, the next correction hits. So here's what we're watching, and I mentioned this. I post a couple day trading ops in the trading room. There's within the range here, you can swing trade or day trade QQQ. Just look for these clear uptrend lines and downtrend lines, and go long in the breakouts. Short the top of the range. Look how many opportunities. Once it's started to establish these reaction highs, you first have to establish the top of the range, which you did here, and then you had 1, 2, and again a third shorting op today to fade it. And of course the day is over. Otherwise it'd be watching this downtrend line, and that would be your next long. Or same story, bounce to the bottom of the range. It's just simple stuff. So this range on a much smaller scale is just like that October or August trading range that we went through in the market. And just like that one, it's going to break either way. Doesn't mean you can't have a false breakout, but that's what you want to watch for. Drop below. This is where I'm going with this next week. Bottom of the range comes in around 191.19, top of the range around 192.13, give or take. And so again, this would, if we can break out and hold above it, that'll probably, it should be the catalyst, might be the catalyst for that run up to new highs, 2-3% more upside or so before reversal. And of course, if we go down here, then here's what you want to watch for. You have a big thin zone down here. This was our gap from yesterday. Even though there's some prices here, this is where the market opened. It's very thin because you have a very well-defined, at least for the near term, support level. So if we break there and we can't recover it right away, there's a good chance we're going to go down, backfill the gap. And then what that does, then we'll flip back out to a 60-minute chart. That would then open the door for a test of the breakout of that August trading range. And so that would be an important level. So again, these are all things to watch for next week. I don't know which one's going to happen, but it can lay out some scenarios. So let's say we come back in. Bulls want to see a successful test. Not a big deal if you come a little bit into the range, because you'd still have, let's say, the gap to backfill. So that would take you a little down below. Might, some bears might jump the gun thinking that's a failed breakout. Technically, but again, if it can hold and they snap back above there, a lot of breakouts, you test, you come in, sometimes you undercut it. So there's the bullish scenario. That's what the bulls want to see. The most bullish thing is we just keep going up. We never even backfill that gap, never look back. But again, I'm showing you a scenario that if we come back in, watch those the tops of those trading ranges, especially the gaps. At that point, with a breakout like that, especially over such a well-watched trading range, well-talked-about trading range, it really has no business, QQQ, no business getting back down well within the range. If it does, I already told you what I think will happen. I think it'll go right on down, not in a day, but there'll be some kickbacks along the way, but I think that'll be it, because that would be this whole thing that happened yesterday and held today would just be one big bull trap, failed breakout. So that's a scenario to look for in the coming weeks to days, as would, of course, that push up. Let's watch if we make a marginal new high, what happens there. And on SPY, same thing. You can see with SPY, let's see if I have that trading range marked. No, I don't. I put some fibs up. Let me take that fib away. But it's the same thing. SPY and QQQ are usually going to trade very similar. They have a lot of the same components. Just have the bigger tech weighting in QQQ. So there's your 2-day range. This is yesterday, and all this is today. And you can see today really it was all the pullbacks were to the open. That yellow line shows you yesterday's close. So we went flat, 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 made a slightly positive close on SPY. But again, big old gap down below. If we break below, I'd probably be more concerned about, that is minor support now. If you want to just sharpen your pencil and look for levels to watch next week, because we have those 3 reactions today on yesterday's close, which is right about there. But you really want to see the bottom of that range go out, and then that's the top of the gap there. But again, I think if you get down that close, you'll probably enter the gap and then maybe go on to backfill the gap. And so that's what you'd want to look for next week. This is a 60-minute chart of SPY. There's the August through early September trading range. That's where we're at now. And let's just see what happens next week. The divergences in the video I did earlier today for members, I mentioned the divergences had been burned out on SPY and QQQ, meaning the indicators made higher highs on the 60-minute chart, but not on the futures. I pointed out these futures charts yesterday. Trend line here was broken today. We didn't really get impulsive selling. Again, we are locked in a trading range, so it's not a high probability sell signal, because we never had any real impulsive selling, which would have validated a breakdown. When I see a security breakout, I like to see impulsive buying or selling. In this case, you had it right there yesterday. So on ES, which we're looking at here, you did break trend. You still have the divergence that was in place yesterday. That divergence has only been extended. You can see it down here. Indicators moving down. But what I had outlined in today's earlier video for members is when I see the PPO looking like this, you get this clean separation usually on divergence like this. You get these, a peak, a trough, and another peak. So maybe the PPO wants to come down like this, come up here, and these divergences certainly have room to expand a little bit. And here's the next resistance at about 3,000 on ES. Lots of reactions on that level up here, back here. And so, should we pop over the weekend, Sunday night, that's an area you'd look for. You want to just see these divergences. As long as they're intact, the odds for reversal are still good. So, man, I'll tell you, I'm probably, let's say, 50-50, but a little bit better than 50% that before we go to challenge the previous highs or make any new marginal high, if we do, even assuming we do, I favored we come back in here and at least back test the top of those August trading ranges. And again, it's these divergences that tell me they can burn through them, but right now they're there. And so that way, as long as they're in place like that, I favor, on early next week that they play out, even if they happen to expand before then. They don't have to. We've already got them right there. We already broke the trend line. We could go down when trading opens again on Sunday night. But or it could look like this. I have 79.25 as a nice support level right here, or resistance actually. It was support back here on NQ, NASDAQ 100 futures. So to me, again, it's a matter of the upside is still minimal from here, and if we come in and back test, this is a level I'd be interested in. How does the market act if it comes in for a back test of those recent trading ranges? Do we go a little bit within there, or do we go quite a bit through there, or do we bounce right off them and then never look back? So again, that'll kind of give us some insight what to look for next week. And finally, I'm not going to go into detail because it's coverage of the precious metals. That's a big part of my trading and what we do on the site. That's member-only content, but I did mention that I've been hedging with the metals, and I turned that into starting this morning as an active trade or active trading off those levels. For example, here, I'll see if I can pull this over here. There's a chart right there, posted this morning. Platinum, and I posted silver, gold, that they had fallen to support. So what happened since my last update? In the overnight session, we had fallen pretty sharply in these, and we were at very good support levels here. I'll just touch on those charts real quick. Here's a live chart of platinum. So that was this morning at support 9:30, and so that covered shorts and mentioned the trading room reversing, going long, and they've just there's been big moves. We're making, at least I am on these hedges and actively trading long and short. Came into the day short, went long, went short again. In just one day, making more than, QQQ has risen or fallen for the past, well over a month now, from the top to the bottom of its range, or at least more so in silver. Silver was a big one. That was a lot of juice in this one. So silver was right here this morning at 1824-ish, 1825-ish support, posted there, bounced right up to resistance and then reversed. So I was able to go short off the highs. It's a hedge to my equity positions, and then reverse just for an intraday day trade. And this was a drop of, I believe, about was it better than 4.5% from that resistance level there? Yeah, about 4% or so, give or take. And again, 4% up following that. So this is where the trading ops lie right now, and it also is a hedge. I went home again with a short on these. Well, a short here, but I took them home because I'm leaving on an equity position into next week, even though I can see the a decent shot of upside. If I'll put it this way, if I didn't see a vehicle that I was comfortable hedging those index shorts with, I would go home flat. I don't like coin toss odds, and I put almost coin toss odds what we do next week. So therefore, at least if I'm hedged, if these hedges continue to play out as I think they would, and you look at the daily charts, silver, gold, all that, I made the case, multiple times on the daily time frame on these 60-minute charts and the index ETFs as well, the divergences, the overbought conditions, and all that. So therefore, I think they'll continue to work as a what I call an indirect hedge. I mean, you can certainly go, short QQQ and then buy a call on QQQ. But that's a direct hedge. But what happens? One's going to wash out the other. So usually I don't like those kind of hedges, because you might as well just close the position out. I like indirect hedges when they are suitable. There are times where you can't hedge the equity positions with the metals or treasury bonds because they're not having that inverse correlation that they normally have. All right, finally, let's wrap it up. I almost forgot, but here it is, IWM. This chart, I can't remember if I covered it in a video or most certainly posted on the site on August 28th. I said we had bullish divergence on the 60-minute chart. I gave you 3 price targets, T1, T2, and a T3 zone between 150 to 150, 119. That was then. This is now. IWM. 60-minute chart, turn on the lines, there it is. T3 zone has now been hit. So in other words, this is me saying that probably all of the bounce that was priced into this divergent low right here has probably now played out. IWM is at pretty decent resistance. if it does go forward, I don't have a position right now in the small caps, but if it does go up, I wouldn't short it here. I'm not that confident that the run is over. If it runs up, next target would be 153.70 right there. It's a pretty good level too. So if that scenario I just laid out, the possibility the market's going on to eke out to a marginal new high, then you can look for IWM to come up here. Let's just focus on this one now. 153.69 right there, well-defined level. Otherwise, you know, if we go into back test or even move back down below the ranges, then the run in IWM is over. That was my final target then. And, you know, I tell you, I wasn't sure. I didn't think it was going to get there, but once we broke out of the ranges, then it was pretty much sealed the deal. That happened actually right when we popped out yesterday. Let me show you the daily chart of IWM because that's important too. Here's a bigger picture with IWM. You know, like a lot of things, IWM peaked back in 2018 and it's well off the highs. But here's a downtrend line with 3 distinct reactions right here, and so therefore, a lot like the stock market, I think any upside's limited. However, if I'm wrong in this market, the bull market has a lot room to run in the last half of the last quarter of this year, maybe beyond. This, to me, looks better than the large cap indexes. You have potential bullish divergence right here, positive divergence right here on IWM. You can see it making a lower low. These were all trend lines. This is a divergence line right here when you have it under prices. These were trend lines that provided objective short entries when they were broke. And here's your divergence line. So that's IWM, how it looks now. Again, the trend is lower. You can see it making these lower lows. But should it move up here, and should the markets continue to firm up, I would expect a reaction on the initial tag, but that's something to look, and I'll keep an eye on this. You know, if I somehow, you know, the economic indicators, the technicals, if these things start to change my mind down, you know, down the road, I told you it's not going to happen in the next week or two, no matter what the market does to the upside. But if it starts to over the next couple months, then I'll be watching IWM. Maybe it comes down in here, works its way within this wedge, and then breaks out later on. Although again, downtrend, and you look at a weekly chart, and I'm more concerned right now on IWM on this longer term chart right here. There's an uptrend line, and here's a support shelf about 144.20. I think it's the same as the support I had there on the daily chart for you. So I'd be more concerned about that breaking, and then IWM heading down to the next target. This is what I think will happen in the coming weeks to months. And then once that goes, there's your bull market uptrend line, and then welcome to the, well, like I said, can't call IWM in a bear market yet. We're certainly in a downtrend since 2018. But when this bull market trend line goes, along with those other ones I just showed you in the beginning of the video on the weekly chart of SPY and QQQ, that's when it's probably a good time to take some index shorts, tuck them away. And I won't say throw away the key because I love trading bear market rallies. I'll be going long on the bear market rallies. But for, you know, trend traders, money coming out of 401ks, these are the things you look for, these long-term trend lines, moving averages and things like that. Let's wrap it up here, and we'll pick it up again next week. Everybody have a great weekend. This has been Randy Finney with the right side of the chart.